Listed on the main board of the Singapore Exchange in July 2005 and subsequently included in Singapore's benchmark Straits Times Index in December 2019, Mapletree Logistics Trust, or MLT for short, is the first Asia-focused REIT in the country. As of the end of the first quarter of the financial year 2024-25, ended 30th June, the REIT's portfolio comprises 188 properties in 9 countries including Singapore, with a total assets under management of about 13.4 billion Singapore dollars. My video presentation today is going to focus on two things. First is to share some of the findings I have done on the REIT's properties in China, where the REIT is facing some headwinds in the recent quarters and it has gotten many retail investors concerned. And second is a review of the REIT's debt profile. Let's get started. Two headwinds that Mapletree Logistics Trust is currently facing for the properties in China. First, due to a weak Chinese yuan against the strong Singapore dollar, where the REIT reports its financial statements in, the unfavorable foreign currency exchange has led to lower contributions coming from the country. Next, e-commerce growth in China has been sluggish, with consumer spending constrained by persistent weakness in the property sector and high youth unemployment rates. Additionally, the vast supply of logistics space in 2023 has driven the nationwide vacancy rate of logistics properties up to 23%. Sometime in March this year, the REIT's management warned that demand for logistics property is likely to remain weak over the next 6 to 12 months. While properties in Tier 1 cities experienced a modest positive rental reversion of around 2%, Tier 2 cities face a significant negative rental reversion of 17% in the third quarter of the financial year 2023-24. As such, they expect a continued negative rental reversion at high single digits to low teens. Let us now zoom into the occupancy profiles of the REIT's properties in China recorded over the last 9 quarters. Between the first quarter of the financial year 2022-23 ended 30th June 2022 and the first quarter of the financial year 2024-25 ended 30th June 2024. Particularly, I will be looking at a few things: its occupancy rate, contribution to gross revenue in percentage as well as in Singapore dollar terms, and rental reversions. One thing to note here before we continue: the REIT did not provide the specific breakdown of revenue contribution from the individual countries for each quarter. They only provided the contribution by each country in percentage terms for the year to date. Hence, the figures were derived based on my own calculations from their year to date figures. Here are some of my observations. The occupancy rate of the REIT's properties in China remains at a high level over the last 9 quarters at above 90%. Considering the nationwide vacancy rate is at 23%, it is very good in my opinion. The property's contribution to the REIT's gross revenue over the last 9 quarters has been on a downward decline from 22.8% in the first quarter of the financial year 2022-23 ended 30th June 2022 to a low of just 18.3% in the first quarter of the financial year 2024-25 ended 30th June 2024. The REITs did not provide a full rental reversion figure for each geographical location over the last 9 quarters, except for the latest 2 quarters, which is the fourth quarter of the financial year 2023-24, as well as the first quarter of the financial year 2024-25. As you can see from the table in this slide, they have been in negative percentages. Just to add, China is the only country that recorded a negative rental reversion, while rental reversions for the other countries has been at positive percentages. Looking at the worsening negative rental reversion in the most recent 2 quarters, it is highly likely that revenue contribution from China will continue to decline in the coming quarters, and this, in my opinion, will impact the REIT's financial performance to some extent, as the country still contributes 18.6% towards the REIT's overall gross revenue in the first quarter of the financial year 2024-25 ended 30th June 2024. When MLT released its annual report for the financial year 2023-24 in June, I noted that in the financial year 2024-25 ahead, it has about 30% of leases due for renewal, of which about 13% of the leases due for expiry are in China, With that in mind, I have asked about the status of the lease renewal, the likelihood of the tenants renewing their leases, as well as whether the management anticipates a further decline in rental reversion in the country. On lease renewals, the response provided by the management was due to weaker than expected economic recovery post COVID and a high supply of warehouse space. Tenants in China have remained cautious where they prefer not to commit early. At the same time, they prefer shorter lease terms. Also, as the management's focus is on maintaining a stable occupancy over rent growth, they expect negative rental reversions to persist over the next few quarters as expiring rental rates are marked to market. This is something I will continue to keep a close watch on in the coming quarters ahead. Next, let us take a look at Mapletree Logistics Trust debt profile over the last 9 quarters. From the first quarter of the financial year 2022-23 ended 30th June 2022 to the first quarter of the financial year 2024-25 ended 30th June 2024. There are three things I like about its debt profile. First is that the aggregate leverage has been maintained at below 40% throughout the entire 9 quarter period I have looked at, which is a very safe distance to the regulatory limit of 50% set by the Monetary Authority of Singapore, or MAS for short. Second is that the REIT has a very high percentage of borrowings hedged at fixed rates, which goes a long way towards mitigating any impacts that the rising interest rate environment have on borrowing costs. And this brings me to the third thing I like about the REIT, and that is, as you can see, over the last 9 quarters, its all-in borrowing costs have rose by a mere 0.4%, which is minimal. Finally, the declining interest coverage ratio over the quarters is something that all REITs are faced with. However, with the US Federal Reserve signaling the cutting of interest rates starting in September, the REIT's debt profile statistics will see a gradual improvement in time to come. In my opinion, it will likely come from the next calendar year onwards. A decline in borrowing costs also means the gradual recovery of distribution payouts. Here is a roundup of today's discussion. The REIT's financial performance will be affected by negative rental reversion and a weaker Chinese yuan in China, but its property occupancy rates remain significantly above the national average. Additionally, revenue contribution in the country has decreased over the last 9 quarters, as highlighted earlier in the presentation. As far as the REIT's debt profile is concerned, it is a very healthy one, where throughout the entire 9 quarter period I have looked at, it has been maintained at under 40%, along with its percentage of borrowings hedged at fixed rates at a high of above 80%. Looking ahead, two catalysts apart from interest rate cuts, which could lead to an improvement in its distribution payout. The first is the loosening of the monetary policy by the MAS, which will bring about better contributions from revenue derived from its overseas properties, where, at this point in time, about 73% of the REIT's gross revenue is derived from its overseas properties. The next one will be the improvement in rental reversion for the leases in China, even though it may take about another year or two, in my opinion. With that, I have come to the end of today's video presentation to discuss on the headwinds that Mapletree Logistics Trust is facing for its China properties, as well as a look at its debt profile. Do note that all the opinions in this post are based on my own observations and are meant for educational purposes only. You should always do your own due diligence before you make any investment decisions. If you found the contents in this video useful, I would greatly appreciate it if you can give this video a like. Also, you may want to consider subscribing to this channel so you will not miss out on any videos I will be posting in the future. Thank you for watching, and I look forward to talking to you again in the next video.